Fundamental analysis is about assessing a company's financial health to determine if it's a good investment. It involves carefully investigating the business behind the stock and gathering evidence to form a clear picture of the company's situation. Think of yourself as a crime scene detective. You wouldn't rely on guesses or gut feelings to solve a case. Instead, you'd gather solid evidence to understand the situation fully, just as a detective must examine all the facts to avoid accusing the wrong person. You need to analyze the business from every angle to make a smart investment decision and choose the right company. The heart of every successful investigation is the drive to uncover the truth. And in investing, that truth lies in understanding the facts and numbers behind the business. When you're new to this, it might seem overwhelming, but let's break down the basics into 3 critical documents. Think of each one as a key piece of evidence that will help you decide whether a company is worth your time and money. The first document to examine is the income statement. This is where you'll find out how much money a company made or lost during a specific period, typically over a quarter or a year. The income statement reveals 2 main things: company's revenue, the money it made, and its expenses, the costs it incurred. 2 important terms to look at when examining the income statement are net income and earnings per share. Net income represents the company's profit after all expenses, taxes, and costs have been deducted from its total revenue. A good way to remember net income is to think of it like being a fisherman. The net income is the fish you catch in your net and can keep. It doesn't matter what other fish are in the water, what counts is the catch you've managed to bring in and keep. If a company is consistently generating a strong net income, it indicates that it is effectively managing its resources and achieving its financial goals. Earnings per share, EPS, is another critical metric to understand when analyzing a company's financial health. EPS tells you how much profit is allocated to each share of stock, which is calculated by dividing the company's net income by the total number of outstanding shares. Essentially, it measures how effectively a company is generating profit relative to its number of shares. Imagine you have a pizza that represents a company's total profit. If you cut that pizza into 8 slices, each slice represents a share of stock. The more slices or shares you have, the smaller each piece of pizza becomes. If the company earns a significant net income, it's like having a larger pizza. Each slice or share ends up being worth more, leading to a higher EPS. A higher EPS indicates that the company is delivering more profit for each share, which can lead to higher stock prices and potentially larger dividends for shareholders. Investors often look for companies with increasing EPS over time, as this suggests that the company is growing and becoming more profitable. Additionally, comparing a company's EPS to that of similar companies in the same industry can help you see how it stacks up against its competitors. This can give you insight into whether the company is a strong investment opportunity. By understanding EPS, you can better assess whether a company is making the most of its resources and if it's a worthy candidate for your investment portfolio. Next, let's move on to the balance sheet. This is like taking a snapshot of the company's financial situation at a specific point in time, and it tells you exactly what the company owns, assets, and what it owes, liabilities. Assets are anything of value that the company owns, like cash, buildings, equipment, and inventory. On the other hand, liabilities are what the company owes, like loans, unpaid bills, or other debts. If a company has more liabilities than assets, it could struggle to stay afloat. You also want to pay attention to equity, which is what's left for the shareholders after you subtract the company's debts, liabilities from what it owns, assets. Think of it like selling a house. After you pay off the mortgage, debts, whatever's left is your profit, equity. If a company has more debt than equity, it can sometimes be a red flag for investors. The balance sheet helps you see if the company is financially solid and whether it has enough valuable resources to cover what it owes. Lastly, we have the cash flow statement, which is all about tracking where the company's cash is coming from and where it's going. Cash flow is different from profit. A company might show a profit on the income statement, but could still be struggling to pay its bills if it doesn't have enough cash on hand. This document breaks down the company's cash movements into 3 categories: operating activities, cash generated from normal business operations; investing activities, cash spent or earned from investments in things like new equipment or buildings; and financing activities, cash from issuing stock or taking out loans. What you really want to focus on here is cash flow from operating activities. This shows you how much money the company makes from its core business. A company with strong, positive cash flow from operations likely means the company has enough cash to keep running smoothly. On the other hand, negative cash flow could be a warning sign that the company is struggling to keep its doors open, even if it's reporting profits elsewhere. Now that we've covered the essential financial documents, it's time to shift our focus to another vital aspect: the management team. When you invest in a company, you're not just buying a piece of paper. You're placing your trust in the CEO and their leadership team to steer the company in the right direction. Think of it like choosing a captain for a ship. A skilled captain knows how to navigate tricky waters, avoiding storms and obstacles while keeping the crew safe. To make informed investment decisions, you'll want to assess the track record of the management team. Solid fundamental analysis can reveal which managers have successfully led companies through challenges and which ones might steer you toward turbulent waters. Look for their previous achievements, how they handled crises, and their overall vision for the company. This insight can help you determine whether the management team is equipped to guide the business toward growth and profitability. Ultimately, investing in a company means believing in the people at the helm. By evaluating the management team's capabilities and experience, you can better understand the potential risks and rewards of your investment. A capable team can turn a struggling business around, while poor leadership can lead to a sunken ship. So, take the time to investigate who's leading the company. It's a crucial step in making smart investment choices. However, the management team's capabilities alone don't give you the complete picture. A company operates within a broader economic environment that can significantly affect its performance. Therefore, when evaluating a potential investment, it's essential to consider macro trends. These are the larger economic factors that can influence a company's success. Look at economic conditions, industry trends, and the competitive landscape. For example, if a recession, a period when the economy slows down and people spend less, is on the horizon, consumers may buy fewer products, leading to a decline in the company's sales. Additionally, if competitors, other businesses in the same industry, are launching new products or gaining market share, the percentage of sales they control compared to others, this can also impact the company you're considering investing in. By incorporating insights about management along with these macro elements into your fundamental analysis, you'll gain a clearer picture of the landscape surrounding your potential investment. That wraps up our summary of the basics of fundamental analysis. You can find the financial statements you need often in your brokerage account on the company's page, or by visiting a website like finviz.com. Additionally, if you have a specific stock in mind, try typing its name online along with the words fundamental analysis. This will lead you to various resources where others break down your favorite stocks or companies, allowing you to see if their insights align with your own research. Please like and subscribe for more content.